Welcome to Stockradar, Stocks on the Move for another week. Today's date is the 17th of November 2022. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, busy week. We'll look at the MACD this week. Got my hammer today. We're looking for sealing the deal on some of these trends, and the MACD can be a very good indicator when the crowd is about to move, and it does help us quite a lot in understanding how the momentum works. So have a little bit of a look at that later on in a couple of charts. But first I want to get into the markets first. We're seeing a bit of strength in the index at the moment. We've got some new stock picks emerging slowly but surely. Our stock pick count is up this week. Check out Trading Centre for an update on all our covered stocks in the ASX 200, which will give you an idea of those that are about to move at the moment. Okay, so we're going straight into the market. As I said, the final nail in the coffin of a downtrend is when the MACD moves above zero. Now, the MACD is just another momentum indicator. They're all based on the price, but it just gives us a bit of an idea. And I get a very conservative approach to using the MACD. Above zero, below zero is basically my defining parameters. And we'll have a little bit of a look at that, how that works with some of the stocks, both past and present, a bit later on. But for the moment, let's get straight into the markets. And the Dow Jones, well, it's been a little bit of unusual strength, the Dow, because it's been performing quite well. It's had a good rally and has had some quite good volume over the last couple of weeks. The pressures have eased here, but it is a little bit of out of sync with the other indices if we have a look at this, because this is nearly back up near towards 34,000. The highs are just over 36. If we look at the Nasdaq, it's really just trying to base out at the bottom here, right down above 10,000. It really has shown very little upside. There's no break of downtrend, no break of momentum. There's a bit of two-way volume here, nothing as clear as the Dow, and the momentum still stays negative. And if we look at the other two major indices, the S&P 500, and also, excuse me, we can see two-way volume here, both green and red bars occurring here. Not a lot of gains here. It's looking a bit sluggish. Sorry, that's the Russell, and the S&P 500 itself is again not looking great. The volumes are high, but there's plenty of red bars here, so, and not a lot of price gains. So the Dow is a bit strange, although if we look at the Dow, there's some stocks like Goldman Sachs, JP Morgan, Amgen, McDonald's, Caterpillar, Honeywell, Chevron, Travellers, and even IBM actually had some very good rallies. So there's some old traditional stocks there that are actually doing pretty well in the Dow Jones. Okay, so that's probably why they're being pushed quite a lot higher. Anyway, so that's the overseas indices. We'll quickly look now at the commodities. Interesting change this week. We've had copper broke up last week, broke out of this little range we were looking at before. We've had a couple of good weeks and some very good volume, so that looks very good there. Very positive signs for copper, and we can see some of the resource stocks starting to respond to that a bit. Gold is the other one also, which is also, and we had a breakdown here. It looked like it was going to go lower. It's turned around and come back up again. We know the US dollar dominates it, but it is recovering a bit. We've got a bit of volume here without being outrageous. Momentum's still fairly weak, although the downside pressure's eased. So whether we get to rally up to here or not, or we go sideways, it will depend on the US dollar a lot. And I see some of our stocks have run on a little bit. Some have, some haven't. So it's been a bit of a mixed bag in the gold sector. So you take your own risk when you play with those gold stocks these days. But anyway, that's what gold. It's the downside probably stopped for the moment anyway, and it's going to try the upside. Brent crude, well, it's probably the weak link at the moment, which is a strange one because it's been so strong before. But it's still trading in that range, R1, S1. It's back down a bit this week. We've got some two-way volume going on here. It's not clear what's been going on there, as geopolitical situations and all sorts of things push and pull that all price around quite a lot. So just be a bit careful there. We do hold Woodside, which is one of the big stocks. It's done very well. People are getting on board that one again. So that's a good one for us there. Now, if we go to the XJO, the ASX 200. It is looking better, a bit more like the Dow. I mean, it's had a good rally up to this recent peak, which was up back in August this year. It's not a long way from its highs. It's had some good rally through here, a little bit of resistance through here, these old lows, and also this downtrend line has been broken. So the buyers are certainly ramping this one a bit, and it looks quite good. I mean, I guess our resource sector and also our banks, a bit like the Dow, the JP Morgan, Goldman Sachs, that side of things is actually doing quite well, the financial area. So that's a good sign. If we just go and have a look at the portfolio is up 5 stocks this week. That's the stock pick count to 27 of 183 stocks. sorry, it's actually the stock pick is up 5, which means we've lost one ETF, which is that bear ETF, which is finally gone. So we've actually got 6 new stocks this week to 27. So our equity is now up to 16%. And not high, but we're getting a lot of, as I said, look at the trading centre, we're getting a lot of new stocks coming on board, haven't broken up yet, but looking like they might break up. So it's quite exciting. Finally, after a year of the doldrums, we might be getting some action happening here. Our conservative portfolio is up 1 to 5 stocks, so it's sitting at 25% equities, 75% cash, a little bit better than the Stockradar portfolio there. But the energizers are both full. We've got some good stocks in there. Because they're leveraged uptrends, we don't need a lot of uptrends to get us in there, and there's some good stocks in there doing quite well. The 5 is full at 5 out of 5, and the 10 is full of 10 out of 10. Top sectors, there's no sectors in the green sector, so it's an across the board pick of the stock picks. Nothing particularly is shining out. The banks haven't broken up yet by my criteria, but they are looking better at the moment. So. That's what's happening there. Okay, now we're getting some stocks now. Look at a couple of leaders for you to start with. Firstly, we've got Wesfarmers, which has been a bit of a dog stock for a while, considering it's such a high quality stock. So it's come down from $66 down to nearly 40, so it's down about 38% over the last 12 months, which is pretty disastrous really. But now we're starting to see a little bit of a turn here. We've got a low here at S1 here at $41. We've got a high low here. We've got a resistance point here. We've got the moving average and the downtrend line here. So this whole area here, sort of around here, is the area that I'm watching at the moment for a breakout. As you know, I follow that process of trend, volume, moving average and momentum. At this stage, we don't have anything on the trend there. We really need to break above R1 to get any sign of this stock moving along. We've also got a bit of resistance through here, so that area there really is quite critical for Wesfarmers. Then we want to see a bit of volume, and we can see down here we've got a little bit of volume appearing on this last little uptick here. Good signs there. It's now above the average, which is a good sign there. Momentum, as we're going to find out later on, it's usually the last one to confirm, but it often tells us when the crowd is about to move, and we'll look at that a bit later on. But it's certainly getting better, but it's got a long way to go yet. So the picture is changing, the swing is occurring, and that's how the trend reversals occur. They can be a bit of a bumpy ride sometimes, but for Wesfarmers, which has long been out of favour, is now looking a bit better. Trend intensity rating is still -6. It's out of that really weak area. It's starting to get better, but certainly not giving us any signals at this stage. So that's an interesting one. The other one I thought we'd look at is BHP. The Oz Minerals thing is probably dominating that a little bit at the moment, but we did have a big bounce up here, probably a bit of copper influence there. We can see the volume here again. It's looking a bit better here, this last little bounce off there. So we've probably got pretty good support here. Whether we're going to get through here right at the moment, I just don't know. We'll just have to wait. It's a good gap up here, which is a good sign of buying strength, but it hasn't really continued on much this week. Might be waiting for a few things to happen there on BHP, but certainly the copper's looking better, which is a good sign for that. And also the momentum index has moved back to neutral. So the picture has certainly changed from what it was a couple of weeks ago. So it was a couple of weeks ago when things were looking quite bad down here. It was driving down here, was struggling to hold S1, but it did hold. It's now been rejected there. So that's looking okay, BHP at the moment, without signalling anything at this stage. But certainly one to watch. Again, trend intensity rating is 6, a bit like Wesfarmers. So that's the two leaders I want to look at this week. And if you don't want to play an individual stock, you can also go to an ETF, and the Van Eck Resources ETF has now come back up to its highs. Its trend intensity rating is +2 at the moment, so it's very close to signalling something. We've got a bit of volume here occurring. Momentum is okay. It's above the average, so we just needed to make a new high, which will signal a resumption of the uptrend for that resources thing. So resources are looking interesting at the moment, so keep an eye on those sorts of some of those bigger stocks. We play mainly in the bigger area. Those resource stocks, the smaller areas can be a little bit dangerous. Okay, on another end, we've got a health stock here, or health, technology, innovation, whatever you want to call it, Promedicus. It's a highly priced stock. Some people don't like those high priced stocks. It's trading around $57 at the moment, but it has formed a trend reversal. The trend intensity rating is +9 for this, which is quite good. We've got a bit of volume here. I mean, volumes were quite big back here, a year or two ago, but they haven't been quite as big of late. So, but still comparably with what we've seen here, we've got a bit of volume here, and the price is rising, which is important. So, Sometimes we can go without volume if you've got momentum, which is positive, moving averages, which is positive, and also this downtrend is broken. It's just maybe struggling to find any sellers to buy from at the moment. So it's certainly looking for like a test of R1. Trend intensity rating 9. Pro Medicus is looking pretty good, and looks like it might have finished that little downtrend there, or certainly finished it. Whether it can get back up to the highs, we'll just have to wait and see. But it certainly looks positive at the moment. So that's also one to watch. Right down at the smaller end, which I'll try and cover, one Monadelphous and some of those. I covered these stocks a while ago in the newsletter for you, for those people that subscribe. If you don't subscribe, you can always subscribe if you like, because you get a lot more information if you do. But Monadelphous was one that we looked at a while ago, along with Southern Cross Electrical, Austin Engineering, Lycopodium, I always have trouble saying that word, LYL. They're all looking a lot better now, and that probably does support the case that the resources are starting to look better as these stocks start to levitate. So Monadelphous is running at +8. We've got a bit of volume through here. We've got a good momentum, and it's well above the average. So it's looking like it's going to go back to that high at R1, which is a pretty big high there, pretty important high. And still a long way off, up around $20. So Monadelphous looks good, and some of those mining services stocks are looking very interesting. Okay, just a recap on a couple from last week. I find this one extraordinary, Perseus, which has just gone from 135 up to 216 in a few weeks, up 60%, extraordinary. It doesn't reflect what the gold price has done by any means. There's obviously other things pushing that, but there are buyers here, and they're down here, and they're buying this stock, and momentum's bullish. So everything is good. Trend intensity rating is 10. Be careful with these stocks, as we know what they can do, the gold stocks, but for the moment it's on a tear. So if you want to jump on board, it still looks okay at the moment, and it has made a new high, which is a good sign as well. So that's another one that looks interesting. We'll look at Domino's again. Covered this the last couple of weeks, just talking a little bit about the bases that occur with these stocks. They're sometimes quite difficult to or quite frustrating, because they can behave very differently. Now, I did talk about this a few weeks ago when we saw this huge volume here, and with this good little run up here off the old low there. It wasn't a huge run up compared to the fall, but still it was positive. People were buying the stock, and then of course about an hour after I'd spoken, we saw the dump down on huge volume. But again, we've seen the buyers have come back in again. So there is a bit of movement at the station down there. The buyers are in there. The sellers gave it a bit of a challenge, but the buyers have come back in, so that's a good sign. So we just wait for the price action to maybe give us a trend reversal pattern that we can hang on to at some stage. It may take a couple of months to perform, I don't know. There will be a lot of people who are willing to sell into rallies here because it's come down so far, so they've got to be cleaned out. So that takes time, and that's why trend reversals takes time, and you get those things like that big week down a couple of weeks ago on high volume. We'll just jump all over it. So that's Domino's at the moment. So that's what the main stocks I'm looking at the moment. Quite exciting, some good ones in there, plenty more on Stockradar. Okay, now if we go back to our trading tactics, the MACD, a few people have asked me about this lately. It's just another momentum indicator. None of them are better than the other. It's really how you read them. My main reading on the MACD, if it goes above 0, it's positive. If it stays below 0, it's negative. So what I'm looking for in trend reversals is really for the momentum index to jump above 0, and that gives me a confirmation and tells me that the crowd might be about to move. So what is the convergence? What is the MACD? It's moving average convergence divergence indicator. It's just another momentum indicator. If you want to go and find out more about it, Incredible Charts is always a good source of information which explains indicators and gives you links to further reading. So if you want to know a bit more about how it's calculated, how it works, go to Incredible Charts, and they'll direct you in the right direction there. But I love momentum, whether it's new high momentum or a stock that's got a trend reversal and all of a sudden the buyers start to jump on board and the sellers give up and go home. That's a good momentum move. That's what I'm looking for all the time, because that's what I trade. Okay, so it is the final piece of the trend intensity puzzle. As I said before, we have that price trend, we have volume, we have moving average, and then we have MACD, which is momentum. And it's usually last when I'm getting a trend reversal, and we're more likely to get trend reversals at the moment because most stocks are down and we only have 26 stock picks out of 162. So there's plenty of trend reversals that are going to occur. And the MACD, which we'll look at in a second with some of the other stocks, is always usually the last to perform. So once we have a trend reversal or new high, the MACD tells us when the power of momentum or the power of the crowd is about to kick in. So we all know about crowd behaviour, everyone jumps on at the same sort of time and wants to be a part of things. Well, that's what the momentum indicator gives us. So that's when the price takes off in effect, and that's what we really want to see. Okay, so let's have a quick look at a couple of charts. First, I want to go back to South 32, which is for a long time ago. We had a very good trade on this one a while ago, and had a little trend reversal back here in November 2020. We had a trend reversal here. It rose above the average. We had some very good volume here, and just shortly after the break, almost coinciding with the break, we saw momentum index kick above zero. Now, we never know what's going to happen with price, but it does say to us then the likelihood that the crowd are going to jump on board and there's going to be a preponderance of buyers over sellers, which means the price has to move higher. And that's what's happened here. And remembering, once I'm in a stock, my analysis is what gets me in, that alignment of the stars, that price trend, moving average, volume, MACD. They're the things that get me in. Once I'm in the stock, it becomes a function of money management. So I'm just following this trend up with a stop loss all the way up here, and there was hardly any correction. And a lot of trends perform like this, and Computershare is a good example of one at the moment. But these sorts of trends are fantastic because they don't tend to stop very much, and they don't tend to pull back very much. It wasn't until we got a serious pullback up here, which we got out, and we don't get the top, we don't get the bottom, we just get this nice big chunk of trend, and we made a very good profit on that. So this was really showing us when the momentum index, it went above here, and although it comes down here, it still stayed above zero, and this is just telling me all this part here that this is still positive. And when this sort of happens, then it's a little bit more different. But at this stage here, I'm probably stopped out anyway, because it's the money management gets me out, not the analysis. So that's South 32, and that's that one trend there. Another trend we had, you may remember, was Fletcher Building, which was a fantastic move up. It was a bit of a dog stock. It was struggling after the earthquakes in New Zealand, but it did break up high here, and you can see that we've got a nice little trend reversal pattern here. No new low. Broke up the highs here, we had some volume appear here, then it really got on board here, and the momentum went very strongly above here, and this is really showing us that the crowd is really jumping on this acceleration, and it continued from 350 up to about 750, and we've got a good signal here about $697 to get out. So this was a money management again. We don't see the pullbacks there, it just flew. Now this isn't always going to happen, that's why we have stops, but when it does happen, that's what we need, and that's how we make our money, because when we get onto these, South 32, Fletcher Building, they're the ones that really make us our money. So that's a really good stock to watch, was a good stock to watch, and when it finished, stocks do funny things. They go up, they go down, and you can have your fundamentals telling you all sorts of things, but price just does what it wants to do. The price never lies, and that's what we always follow. So that's Fletcher Building. Another one, more recent one we've seen is AMP, which again, I'll just try and blow this one up without making too much of a mess. It's quite a busy chart, but if we look at this here, we saw some volume appear here. Let me just put this up a little bit so we can see a bit more what's happening in the volume front. This was the big trend reversal here that was occurring. We had a big resistance point here, then we started to get the sellers were dominating, then the buyers started to dominate, and when we got a break above here, this high, this peak between these two lower, this low and this higher low, once we got a break above there, that gives us a signal. We've got some volume there, and momentum was already above zero there, which is a good sign. So we've actually got all four things telling us here. We've got the price break, the moving average, we've got good volume on the break, and momentum was already moving high. So this was a slow turn, but momentum had plenty of time to turn and change as the sellers started to dissipate in this move here, and they started to climb higher and higher and higher. Okay, now we didn't get any signal here because we didn't have a trend reversal. It wasn't until up here, at this point here, when we actually got the reversal that occurred, and bang, it's gone straight up from here pretty well, and it's looking not too bad for AMP. So quite excited about that one because I know a lot of people have lost a lot of money over the years on that one there, so hopefully we can make a little bit of money back. Okay, mineral resources, well, we all know about this stock, but again, I look at the momentum index here. You know how much I love this pattern here when we break a series of three highs here, and we've got this upsloping downtrend, and it breaks high. That's really telling me that this is it's a build up of pressure, and it's exploding. And we can see here it is exploding here. Momentum is also jumping on here. So we've got the volume, we've got the price break above the average. We get a volume on that week. We've also got some selling here on these 2 weeks here, but it doesn't make much difference to the price. And the price continued higher. So that selling has been absorbed really well, and momentum now is really telling us that this has probably got quite a long way to go. Because momentum, it's hard to get momentum this high on the scale so quickly. So that's what Mineral Resources is looking like. If you can see the name, it's in there somewhere. There it is. Okay, so you can see Mineral Resource. We can see our volume there, and it looks quite nice indeed. Okay, moving on to the next one. A2 Milk's been another one that's had a struggle. Let me just blow this one up. It's had a struggle for a long time, A2 Milk, but finally it seems like things are starting to turn there, and we're now getting this here. So if we look back across here at this chart, sorry, that's a bit too much squeezed up. We can see the downtrend here, we get a low point here. Now we actually do get a small trend reversal pattern down here, but it doesn't get any trend intensity confirmation. It's not above the average. Volume wasn't that good at this point there. And momentum was still weak, so it wasn't enough to drive trend intensity to positive levels. It wasn't. When we do that, we just raise the trigger level to the next resistance point, which was up around 540. Okay, and once it broke through here, we then got a signal to buy. We've got some good volume, and also momentum starts to jump on board a couple of weeks later. Okay, so it's a little bit slow, but now we're starting to see the price grain starting to happen in A2 Milk. So you know, it's the downtrend's got a long way. It came down a long way, and so it's probably got a long way to rally from here. A lot of potential, I should say. So A2 Milk, the crowd is starting to get on there. We're starting to see some volume, momentum above the average, and it's holding above the average. All those signs are good technical signs for A2 Milk to continue its rally. Just remember, use your stop just in case it doesn't come out. Okay, so that's a more recent one. Another one which is just really starting to look interesting is Bapcor. It's had a bit of it's almost like a head and shoulders here, if you want to call that a head and shoulders, an inverse head and shoulders. It's starting to move higher again. It's starting to break up this week. Got some volume here. Momentum hasn't quite got above zero yet. It's just about to, but all the other signs are good as we see the trend reversal level start to break. It's above the average. A bit of volume is starting to appear, not a lot. So it's it's not totally out of the woods yet. Trend intensity is still mild. It's positive, but mild at +6. But it does look quite good, and I do notice, and I will cover in the newsletter this week. Next week, the end of the month, the consumer discretionary stocks, because there's some interesting things happening in some of those stocks there, certainly worth watching. And they've again been in the doldrums for quite some time. So sort of exciting stuff that's happening at the moment. More opportunities are appearing. We just have to be careful to control ourselves. We don't get too carried away with buying everything, and make sure we're focused. That's why we have portfolios that restrict us to our trend, to our limited amount of trends, and we just make sure we control everything we do and not too carried away. The other one, which you have seen, I think probably recently, is IEL, which has also created a trend reversal. We can see the pattern here, the downtrend here. A trend reversal must be reversing a downtrend. We can see this rally here, pull back to a higher low, and then we start to rally up through this point here, which gives us a higher high and a trend reversal. So that's now trend reversal. We've got some volume here. MACD is just starting to move above zero this week, which is good. So that means the crowd is probably starting to get on that one now. So R1's got to be a realistic target for this stock, and we know that education, students are returning, those sorts of things. And I think a little stock that I showed you a few weeks ago called iCollege, it's also been a good performer. So in that area, so some of those stocks, we're now starting consumer discretionary, some of those education stocks, they're starting to move, and a bit of confidence is starting to build in some of those stocks. So all that sort of stuff is a good sign for us. So as I said before, MACD is often the last one to actually give us a signal, but it's obviously that gives us a sign that the crowd is about to move, and it's a positive thing. It builds the picture or completes the picture, and that's what's happening with IEL at the moment. Okay, so that's mostly what I've got to go. Don't forget about our stock market blog. You can subscribe to that, and we'll send you YouTube videos and any articles I do. You'll also find a huge backlog and library of all sorts of articles, anything from trading, discipline, psychology, portfolios, probabilities and risk, completely there. Lots of articles there for you to read, all free for you to have a look at. Okay, so that's really all I want to talk to you about today. The MACD signal is when the crowd is about to move. It's just one of the trend intensity components, but it is one to watch. The 4 different components of the trend intensity are designed to measure different sort of sentiment indicators, different measurements, and I compile them into one to give me a general picture, and that's what I do with trend intensity. Okay, well, that's all I've got for this week. If you've got any questions, send them through. I'm always interested to hear from you guys. So stay safe, watch your trends, heed your stops, give me a call if you need any help, and I'll see you all again next week for more insights, and hopefully we'll have some more stock picks for you. Okay, thanks very much, and I'll see you later.